Konnichiwa. Welcome back to Money Mind. Sushi, Hello Kitty, cherry blossom. Dining in Shibuya, shopping in Ginza. Asia's fascination with all things Japanese has transcended into buying condominiums and buildings in the island nation. Now, it's freezing cold in Japan right now, but Money Mind's Winnie Pasquale braved the weather to show you where the hotspots are for investing in property in Tokyo.
Bright lights, mega billboards, crisscrossing crowds, endless dining, shopping and entertainment choices. This is Tokyo. Its spirit is alive with nary a trace of depression for a country that has suffered a persistent economic downturn for decades. In fact, it's touted as the comeback kid, largely due to Abenomics, a series of monetary easing aimed at pulling Japan out of its deflationary slump.
Anything that is a broad stimulus to the economy is good for raising wages, it's good for raising rents, it's good for raising capital values in real estate. So, that's the immediate impact of Abenomics as it applies to the property sector.
Tokyo, for instance, has emerged as the top investment city 2 years in a row in the annual Emerging Trends in Real Estate survey. It's tops not just for residential, but also for office, retail and hotel sectors as an investment destination of choice.
The Japanese property market in general is very, very strong. We saw a return to volumes in Tokyo anyway that were in excess of what we had seen in 2007. We're at a very different part of the rental cycle, so it's likely that enthusiasm will continue for the next couple of years.
Recently, Taiwan, Hong Kong and Singapore investors are actively buying properties in Tokyo. In Singapore, Japanese property developer Sumitomo Realty and Development is one of many conducting regular seminars and tours on properties in Tokyo. It's currently marketing its mega project, the De Tour Canal and Spa, consisting of 1,450 residential units located in Harumi, 2 kilometers off Ginza. Harumi is an upcoming area with office buildings and new residential projects on the way. A one-bedroom unit in De Tour with a size of 45 square meters starts at around 550,000 Singapore dollars, while a two-bedroom unit at 55 square meters is about 700,000 Singapore dollars. Now, if you have a bigger risk appetite and millions to invest, you might even like to look into buying an entire building. Orange Tea's Japan Business Development Unit, in collaboration with Tokyo Livable Japan, offers investment opportunities not just in residential, but also in commercial, retail and hotel properties.
For a retail investor, they can find a unit or a floor somewhere in the 300,000 to 3 million Singapore dollar range. If you're a high net worth investor looking for a full building or a hotel, for example, we see people come in with 5 to 10 million Singapore dollars. If an investor has 5 million, maybe 5 to 10 million Singapore dollars, we can put them in a building in the Tokyo area.
For instance, this 3-story, 2,800 square foot retail building in Shibuya was recently sold to a Singaporean investor for around 4.8 million Singapore dollars. Its proximity to the hip cat street in the upmarket area of Omotesando makes it an attractive investment opportunity for retail leasing. Just 2 minutes off Harajuku Station, nestled within the trendy area with youngsters, this 2,700 square foot retail building was sold for 4.7 million Singapore dollars. Strata retail is also on offer, such as this, sold for around 1.8 million Singapore dollars. With a weaker yen, a lot of Asian investors are now jumping in to own a piece of property in Japan.
Now is the lowest timing to buy Japanese yen. And the other point is condominium price. So condominium price will definitely increase because the material cost will increase due to the cheap yen, and also there is a huge demand for the 2020 Tokyo Olympics.
Development work and infrastructure projects are currently underway in preparation for the Tokyo Olympics in 2020. And many foreign investors are buying properties believing prices will rise.
Whether or not that's a good idea is debatable, but since people are doing it, you might be able to take advantage of that momentum.
I don't think central Tokyo sees a ton of enhancement in capital values. I think the most interesting thing to watch is what happens in East Tokyo and the areas surrounding Tokyo Bay, particularly after the Olympics are done. It's a part of Tokyo that, in spite of its proximity to everything, has never really attracted a ton of foreign investor attention or a ton of institutional investor attention.
But market analysts believe Tokyo property's real value may be its low level of perceived risks, long-term durable yields, and affordable financing.
Tokyo has a historical appeal that is very different from a number of other markets in Asia. It's probably most easily compared to the Australian market in the context of it has relatively low volatility. The market itself is very predictable and quite easy to read. It doesn't suffer from the same level of volatility that you'll see in Singapore or in Hong Kong, where you'll see double-digit movement in rent rates or double-digit movement in yields on a quarter-on-quarter or on a half-year basis. It's not an opportunistic market by nature.
In central Tokyo, for commercial or residential, you're looking at a yield in the 3 to 5% range. But what Japan's also known for is very cheap financing. You can put a mortgage on your commercial property that, if you do it properly, if perhaps we use our network of lenders, including the Japanese mega banks, to secure your debt, you can be looking at a 1% cost of debt.
Tokyo real estate is also regarded as value for money because of Japanese renowned standards in quality construction and ingenuity, such as in installing anti-seismic systems in buildings.
When you look on a price per square foot basis or a price per square meter basis, Tokyo does look like significant value for money when you measure it against, say, Singapore or Hong Kong or London or New York. It stacks up. There's high quality buildings. They're very, very well engineered buildings with a level of finish that is, courtesy of the Japanese general contracting universe, a very, very exacting level of finish, and yet they appear inexpensive relative to these other markets.
If you're planning to buy a property in Tokyo, here are the hotspots.
Just looking at Tokyo, Ginza's right here. That's a very high-end shopping area, possibly one of the most expensive in the world. There are very popular high-end residential areas in places like Azabu or Aoyama. Shinjuku is a very popular business and entertainment and residential ward in Tokyo.
Here are some of the things you need to take note about real estate in Japan. Most buildings and land are freehold. A 10% deposit is due upon contract execution, the rest upon property handover. Initial taxes include stamp fee, acquisition tax, property registration tax, and consumption tax. Bank financing in Japan is difficult, but some Singapore banks are already offering Tokyo property financing. Some property developers and agencies offer a one-stop service that includes leasing, resale, maintenance, and even interior design of your purchased property.